Are there any tax loopholes only for the wealthy, or are they the tax loopholes that everybody can use?
So the wealthy use them, they utilize them, but they're not just for the wealthy. You can have it, I can have it, everybody can have it, but it's about reverse engineering why you have that in place and where it ends up. If you know, take property investing for an example, if you know that you want 5 properties and that's it, and it's a pension, well then you don't need crazy trusts and structures if that is the goal. But if you want 50, you need to start at the end point and work back. They're not just for the wealthy, but it assists in becoming wealthy, which is where people think, oh, the rich have this advantage. No, they're rich because they used that for their advantage.
Okay. And are there any like common deductions that people just don't know about?
There's so many. Most people underutilize a limited company. Uh, Mileage, business mileage, working from home. If you're away from the office, making sure that you keep receipts and you use your business card. It's more about building the habits of being a business owner into your life and making sure that you understand how to efficiently use the company. That saves you the money. Spending pre-tax money or post-tax money, the difference is huge. If you have a pound and you've already paid 20% tax on that, that pound costs you £1.20. However, if you have an expense in your company, when you spend a pound, you're saving 19%. The difference between that figure and the post-tax figure, that's the difference between 10, 20,000 pounds at the end of the year.
Wow. Yeah. But sometimes, like, even I'm a business owner and I get really confused because I'm like, do I use my personal debit card here for this coffee?
Yeah.
Or do I use the business one? I'd love to use the business,
Uh-huh.
but I don't want no one knocking on my door over a £5, £10 expense going, you can't claim that coffee because that's not a business expense. And it's like, but I left my house this morning. I've gone to a meeting. Yes, I've done a little personal pleasure of going to the gym, my health. And then I've got a viewing a little bit later. Is this business? Is this personal? How do like HMRC see this, and how heavily do they scrutinize this?
HMRC are a business just like us. If the cost is wholly and exclusively for the company, then it's an allowable expense. Everybody's business is different. You could be creating microphones, investing in property, or owning a podcast studio. There's no set list of expenses, but if it's wholly and exclusively for the business, it's allowable. A lot of it is common sense. The most important thing is having a good accountant, because you could spend £1,000 of a personal expenditure on your business. That's okay because we would just remove it from the accounts. We look at everything you do within the year and we say we can claim that, we can claim that. That's a trivial benefit. That's not, that's a trip to Barbados. Let's remove it. So we make sure that all of our clients don't get in trouble. But it's better to overutilize a company than underutilize it. Because if you're using your personal card, we don't know what's going through there. And there will be lots of things that you spend money on, such as a mobile phone bill. If that is not through your limited company, we don't know what you're spending on it. And if 50% of that is for business use, we can claim it. So if you have everything going through the limited company, you save a lot more money. But it's about understanding the level of wholly and exclusively for the business, and this is nothing to do with the business. That's the key.
I think it's because like school doesn't teach us any of this sort of stuff. They don't. It's a very grey area. They get you ready for employment. Like, what do you want to be? A teacher, a fire engine man, a police officer, But they never go, you want to be this thing called an entrepreneur, and they won't tell you what's wholly exclusively. Like, these are like new terminologies that you have to almost learn after uni, or if you don't choose to go to uni and you end up doing a business, then you have to sort of work it out as you go along. And it's normally a big shock after your first year in trading business, because you go to your accountant and he'll ask you for a whole heap of things like, where's your receipts? And it's like, I didn't know I need to keep them, and oh, where's your business account? Well, I didn't know I need to set one of them up. I just use my personal account. So it's a little bit of a grey area. Like, for example, like if I was going to go to a networking event and I was like, look, I've got a big brand. I have to look 10 milli guy, for example. Um, so I definitely need a new blazer. I don't want to be wearing a blazer that I wore before, and I want to look the part because it might get me a handshake to make more money.
Mhm.
Um, is that blazer now a business expense?
There are a few things that HMRC are very clear on. And clothing, if it has a duality of purpose, which means you personally benefit, and yes, it could be for the business event, but also you wear it, it makes you feel good, it's not allowed. However, there are a few variations of that. If it had your logo everywhere and it was marketing and branding, that would purposefully be for the business, because when you're wearing it, people say, there's Sean's business,
Yeah.
there's John's business. That's okay. Or if it's safety equipment, which you wouldn't really want to wear to a
So
business
basically,
event.
just get Sean Land
Yeah, just a
embroidered on hair,
tiny.
a little stitchable one that can be removed on the
Yeah,
outside.
yeah.
I love that, man. I love that. Um, is it true that you can write off everything as a business expense?
No, that is not true.
Where do you sort of draw the line?
It has to be related to the trade of the business. Expenses are allowed in a company because they allow for the company to make a profit, and then the tax goes to HMRC and the government for spending. So if it allows the company to employ more staff, more people can see it, you can make more sales, it's allowable if it's for the company. All businesses are different. That's the key thing here.
Um, there's a rumor that hiring family members can save you on taxes. Is that legitimate or is that a risky move?
Absolutely, it's not risky. There's a few rules. Employing staff and employing family is no different as long as they have a role in the business and it's at market rate. What you cannot do is put mum, dad, Sally, the dog on a payroll scheme and they're not doing anything. Emails, admin, social media, packaging, uh, anything that actually supports the business and they're paid at a market rate, absolutely. I'm a massive fan of the family unit. It's how you can utilize the thresholds, keep as much of that cash as possible, and it stays in the family.
How young can you have one of your kids working in your business?
So there are different rules for the ages, but 13 part time, 16 more hours, but there's a threshold of 13, 16 goes up to full time.
Okay, so you can have a 13-year-old
Yeah, yeah,
on
there are
your business.
specific rules, and it depends on, it cannot affect their schooling hours and it can't affect their life, but it needs to be legitimate too. So there needs to be a record of something they're doing. So if you were taking a photo shoot and say you were selling kids' clothing, rather than getting a child in to wear the clothing, you could pay your family.
Yeah. Or if, like, for example, my 15-year-old daughter,
Mm-hmm.
she was doing some of my social media for me,
Absolutely.
looking
And
at.
they are better than we are because they've got a finger on the pulse of everything that's changing within the social media world. So it makes a lot of sense.
Mate, they're born with an iPad in their
Yeah,
hand.
I know.
You know what I mean? That's just normal to them. That's just like, putting their underpants on. Do you know what I mean? It's just so normal. There's something massive happening in the markets right now. So at the time of filming, this is December 2024, and we are currently in a bull run cycle of the crypto space. So we got cryptocurrency, you got the big daddy Bitcoin, you've got Donald Trump singing and dancing all about it. You've got the guy who invented, is it the Shiba coin? Elon Musk starting to work with the US government. And right now, I think if you are invested in crypto, you would have seen your crypto portfolios pumping right now. Bitcoin has just shyly missed 100,000, but they're tipping it to go to 115, 120, and it's like the new digital gold. But along with this, obviously comes taxes, capital gains tax. And being that crypto is such a new space, a lot of people are a little bit confused about what are we gonna do in terms of, like, do we sell? Is it the normal capital gains threshold?